Dear Avery Horton, here I made a video to tell you how I understood your system or your general concept, what I tested and where I see where it will fail. So the general concept, as far as I understood it, is to look at 3 consecutive candlesticks, and then once the second candlestick has the highest high or the lowest low, we should sell, if it was the highest high, the price on the third candlestick if it crosses the open from above to below, or to do the vice versa thing if the second candlestick shows the lowest low, right? And even though on Forex Factory also wrote that we should first check out whether the wick of the third candlestick is coming closer to the high or low. However, during the thread it turns out that also you don't think it is that important. So here's how I backtested the idea. So you first suggested to put the initial stop loss to the high or the low, depending on whether you have a lower high, a higher high and a lower high, or vice versa, plus minus 1 pip. And that's of course a good news to me, because if I use this as a fixed stop loss, then I can test even the strategy on day 1 candlesticks of EURUSD that I downloaded for the last 15 years, so starting in the beginning of 2010. And moreover, I was only interested in one-to-one risk-reward ratios. And even though you said that you should be aiming for smaller wins than losses, then you will distort your profits and losses, and you will even deviate from break even, meaning that the spreads will go more to a break even and they will kill your bankroll. And if you haven't heard about this, just test this yourself if you don't believe, but I will also talk about this later on much more. So I first was interested in the general idea or the general concept, and that is when I was looking at 3 candlesticks, the 1, 2, 3 setup, then I could just first check whether the higher high or the lower high, higher high and lower high is given, and then I could have entered, once I saw this, from the open line of the third candlestick. However, I of course need to know or have to look at the closed third candlestick to then check out whether I should buy or not. However, I was only interested in whether the take profits and the stop losses had the same size, and I used R or RStudio to test this idea. And if I was looking for all trades, meaning for long trades as well as short trades, I got a quite big winning percentage, so close to 60% that I would have won in this case. However, there's of course a difference in long and short trades, because on general, from 2010 to today, the price of EURUSD was falling. I think for over 2000 pips, if I just calculated correctly. And thus there's a difference. Nevertheless, if I would have known in advance whether the third candle's high or low is higher or lower than the previous low or high, I could have made profits on average in both cases. But of course, you can't trade this way, because you don't know whether the third candlestick will make a higher high or a lower low. So it doesn't work at all. Nevertheless, of course, just looking at 3 closed candlesticks, it's really an amazing strategy. But I don't see any way how to do it. Thus, I was testing a second strategy where I just waited for two candlesticks, where the second candlestick shows a higher high or a lower low than the previous candlestick, and then I would have entered to the counter direction in the trade to trade away from the open. But of course, it won't tell me in advance whether the third candlestick will even create a higher high or a lower low. I also ignored cases in which the take profit and the stop loss could have been happened on the same candlestick. So for instance on the fifth candlestick, because I had no idea which has been hit first in that candlestick, since I only was looking at daily candlesticks, whether it would have first hit it, the take profit or the stop loss. And you guess it? Due to this strategy, I already expected that I won't win more on average than I would lose. And this is also what you can see here. And the third strategy was that I was waiting for 3 candles to show either a higher high, either a lower high, a higher high, and a lower high, or a higher low, a lower low, and a higher low. And then I would have waited for the fourth candlestick until it reaches the open line and breaks it in the correct direction. And then I would have entered in order to get the take profit or the stop loss. However, of course, this will mean that the price has to come closer to my stop loss position, and I would get a smaller advantage, and the winning percentage or profitability will be closer to 50%. And again, that's exactly what I saw with my backtest. They were much closer to the 50% than any strong advantage or disadvantage. Well, what I wrote here is that I assumed that the previous markets rule that I talked about would bring the winning percentage closer to 50%, and this general markets rule, this universal rule, is that whenever you adjust your risk to reward ratio, it will also change the average number of won or lost trades, and it would also of course work the other way around. If you choose the size of the winners and losers, your RR ratio will be adjusted, which means of course if you suggest to use only smaller winners than losers, you will more often win the winners. However, the size is of course smaller, and thus, since the losers are bigger, you will nevertheless only get a winning or will only make any profits on average and dollar-wise 50%, which means you would win 50% of your money in general and would lose the other 50%. So it's not really a positive outcome of this trading. And thus I ask, how is it possible to win more than losing on average? And according to this rule, it cannot be done by just going for smaller profits. What you recommended on YouTube to me, and which has been also written on Forex Factory. And due to my own investigations, I cannot see how your general idea can bring you more than anyone else to a winning or losing man. It cannot be done by adjusting the take profit or the stop loss. But of course, I don't believe that you are lying at us all. However, I can't see how to overcome this trade-off between winning and losing sizes and the risk reward ratio. I already asked these questions many times before, and others also did it, but you and anyone else ever gave us a concrete or a definite answer that really can answer this question. But if you really want to teach real knowledge to people that want learning from you, like me, then please do it. I mean, I'm really looking for it. So thanks a lot. Best wishes, and reading you later. I'm looking for a video from you, or maybe some more posts that go on these problems I see and can explain how you can still win. Bye.